There's a new report that the Biden administration is planning what is being called the biggest tax increase in 30 years. Now, I want to be really careful in how I report this because, first of all, tax increase is a relative term in that much of what Joe Biden wants to do would be to undo, in some cases, only some of the Republican tax decreases of the past decades. Also, none of what is being reported is outside of what Joe Biden promised to do. So we're seeing all of these hot takes about shocking betrayal by Biden of I don't know what, because he told us when he ran what his tax plan was going to be. And the reports from Bloomberg yesterday, which broke this story, that Joe Biden's next big project is tax reform. It's the stuff he told us he was going to do. So let's look at it. The reported Biden tax plan priorities are to increase the income tax rate on people making more than $400,000 a year. Remember, that's earned income separate from capital gains, which we will get to. Joe Biden would expand the estate tax, which we don't have the details yet. You could expand the estate tax in two ways. You could make it kick in at a lower level of wealth, or you could increase the rate at which estates are taxed. Joe Biden will, this is the report from Bloomberg says, Joe Biden will look to reduce tax preferences on pass-through businesses, which would affect the David Pakman show, would increase to a higher capital gains tax rate for people making over $1 million per year, would increase the corporate tax rate from 21 to 28%. And in all likelihood, even if he were to move on this very soon, nothing would take effect until at least 2022 as a tax year, meaning that you would deal with these changes sometime between January and April 15th of 2023. That's right now. And of course, that may change. Now, let's just pick one of these because so much of this is being sort of misunderstood. The corporate tax rate, what Joe Biden wants to do is increase it from 21 to 28%, according to this report. It's important to remember that the corporate tax rate, number one, used to be in the mid 40s, and then it dropped to the low 40s, then 35%, and it stood at 35 for a very long time. Then it went to 21 under Trump. So what Joe Biden would do would be to only go partially back to the longstanding corporate tax rate of 35% by going to 28. It's not exactly radical. And then just as importantly, there's so many people saying going to 28% will hurt small businesses. This is a fundamental misunderstanding of most small businesses. Most small businesses, if you're a sole proprietor, if you are an LLC or an S corporation, this doesn't affect you because all of those business entities are taxed at the personal rate. What I mean by that is if you have a personal house cleaning business and you make $60,000, you don't pay a 21 or 28 or 35% corporate tax rate. You are taxed on that $60,000 on the personal income tax rates. Now, my prediction is that politically, a lot of this stuff is going to be really tough right now because of the pandemic. And we'll talk to Bill Scher about this a little bit later on the program. Of course, Republicans are all going to say we should never do tax increases, but in particular, we shouldn't do them right now because of the pandemic. There are also going to be some Democrats who will make that case, particularly in the Senate. I do think that increasing the corporate tax rate is the easiest thing to do that Joe Biden is proposing. I believe that the other aspects of this are going to see significant political difficulty. I'm not saying it shouldn't happen. I am merely giving you my opinion of what I predict is going to happen. Now, we talked about some of the changes that are going to be made there. In terms of pass-through entities and different things. The tax plan Joe Biden is proposing, if it happens, is going to lead to me as the owner of the David Pakman show paying more in taxes. And I'm okay with that as long as the money is being put to good use, which it already is not. And as I've said before many times, we could and should be rethinking our spending priorities now. And we may not even have to increase taxes to fund the programs that are important to us. That's separate from whether billionaires and millionaires should be paying more. And they should. But of the roughly $1.5 trillion in discretionary spending that the federal government does, almost half of it is for the military. What? That's insane. So I'm not saying have no military. I'm not saying be weak. I'm not saying anything other than half of our discretionary spending shouldn't be going to the military. And that's a conversation that must be had regardless of what the tax rate is on whoever. Now, the question here is less an economic one than a political one. We know that Joe Biden's plan would be deficit negative. It would raise more money than it would cost. That's been analyzed by the Tax Policy Center. We know that. The question is going to be, my instinct is that you are going to see Republicans and some Democrats come together and say it's not the right time to do this. Let's see how it goes. For now, the White House is simply saying, without commenting on the Bloomberg report, anything we do would not increase the taxes of people making under $400,000 per year. That's the statement from the White House so far. Friday, March 26th, one-day membership special, massive blowout, huge dumps of discounted memberships are going to be coming in. To be notified about how to take advantage of the March 26th special, simply get on my newsletter by signing up at davidpakman.com. We'll take a quick break. And if you're on Twitter, let me know, do you think Joe Biden can get tax reform done this year in the current political climate? Find me on Twitter at dpakman. Let me know what you think. One of our sponsors is privacy.com. They're giving you $5 when you sign up for their completely free service at privacy.com/Pakman. I've been using Privacy for a little over a year now. You've heard me talk about it before. It's a lifesaver, and here's how it works. It takes just a couple of minutes to set up. Anytime you buy something online or on the phone, instead of actually using your real credit card number, the Privacy app and the browser plugin let you give each company a randomized virtual credit card number that you create out of thin air. It'll even autofill the card number with one click. And the payment is taken out of your checking account without the merchant ever knowing your real information. So this allows you to keep your banking information secure, but also to take control of your finances. You can create up to 12 of these virtual credit cards a month. You can set spending limits. You can freeze them. You can delete them anytime you want. So when you do this, it means you're not going to be charged when you don't want to be, because you can destroy the virtual card number right after using it, which, for instance, I love using free trials because I know I won't be charged when the trial is over if I use a virtual credit card number. You're keeping your identity private by not telling companies who you are. You're keeping your bank or credit card info protected against data breaches and identity theft, and it's free. And like I said, you'll get $5 to spend when you sign up at privacy.com/Pakman.